Hey guys, Mike here. So we're gonna have a short week, but a busy week ahead. So we're gonna get into a bunch of different stuff, like how the market actually performs during Martin Luther King, which of course is the day as I'm recording this, but they'll say the week, right? And so how does the market perform? And I'll show you a chart and I'll show you why it performs this way, okay? Then we're gonna go ahead and get an update because a lot of you guys have been asking about this from our volatility guy. And so I found a recent interview he got put out Friday, and so it's the most recent one I could find, and he gives more detail what he's expecting not only this week. Remember, he said it could be a blow off top because of OpEX coming in this week, monthly OpEX, and so he's also going to extrapolate all the way out into February. Okay, so we're going to go into that as well. Plus, a lot of things you're starting to see on charts right now to be very aware of. And of course, we do have earnings now. We are in earnings season. This is going to be really an important week for small caps more than any other because you have a lot of regional banks supporting, and a lot of those on the IWM, which has been selling down right now. So getting into this, you can see the S&P, believe it or not, did have its first green week of the year, but you can see who did the heavy lifting and what it took, right? The MAG, we'll call it 6 because the seventh one, which Tesla, was a disaster, right? But all the other ones did the heavy lifting, okay? And this was able to pull the S&P up right there. And so give it its first green week, so no surprise there. You saw more of a rotation. I don't know if you call it a rotation, but really more money flowing into those mega caps as soon as it was all about the rate hikes may not be happening in March. Oh my goodness. And so they flowed back into what they knew all of last year. Now, how does the market perform during MLK week? And the truth is, not good, right? It's up 38% of the time, okay? And the market is normally up 70+% of the time when you measure in years, right? And so there's a real easy reason for this, and it's simply because the holiday falls on the third Monday of January every year, which is the third week, most likely, every single time. I can go to the calendar for the majority of the time. It's going to fall into monthly OpEx, which is usually in January one of the biggest OpExes out there, trillions of dollars of options expiring, many flows are having to be readjusted, shorts covers, new shorts opened up, all kinds of crazy mess. And so that really explains why it's like that, okay? And so are we expecting anything different this week? Probably not. I mean, you can't imagine we are. But let's see, and let's listen to our volatility guy, Jim, here, and see what he has to say.
When I say starts, that doesn't mean, again, the day we're going to get that decline, right? I think we've been drawing that circle out there for a while. A lot of people are now preparing for it, positioning for it. That has a reflexive effect as well. We have to be cognizant of that broadly. But our view is actually, and I'll be a little bit clearer here than I've been on other platforms up until this point. We believe that window opens January 17th. There is a window January 17th, really till the end of the month. So call it, February, January 31st, February 1st. If we don't start to see that decline in that 2-week window, where flows are weaker, we would expect continued stability until then February expiration, which is, I have to look at my calendar, but 14th or 15th, right in that window. I think it's the 14th, that Wednesday. That's when you would really, I think there's a higher probability of a continuation. So some chop back and forth during this period. If all's well supplied, maybe just a small pullback, followed by again maybe a little run if we don't get some vol in this short window back to new highs. Could very, very well happen. But again, a lot of chop, vol compression. And at the end of that in February, then if we start to see vol increase in the market kind of go higher, I could see a Feb 14th reversal being the most likely. But again, January 17th, there's a little window here. And, I would definitely not be, aggressively bullish at this point. We have been very aggressively bullish since November 1st.
And so hopefully that makes sense. I mean, remember, we hadn't even hit all-time highs on the S&P yet, right? It's just struggling between that range we talked about, between 4,700, 4,800. And as I said before, and I mean, it's common sense, if the MAG 7 don't get involved, you can forget about the S&P going to all-time highs. Now all of a sudden, the MAG 7 or 6 now, this one's in the dumps, is pushing this thing up, right? But I mean, some of those have been on some crazy runs. Some are already setting at all-time highs, like a Microsoft or something. You're getting bounced off these moving averages and stuff. And so, could it happen? Yeah. And the question is, once the S&P hits the all-time high, remember what happened to Apple? Remember what happened to Microsoft? Like, usually when they do that, what happens? you get a pullback, right? And so that's another thing people are looking at and everything. So, and we also know, we talked about first quarter, especially January, February. I mean, this first quarter, March, everybody's expecting some kind of form of a decent pullback at some point in time, whether we're in that now, whether it comes later, whatever it is, we'll have to find out. But, some things to look at on this is, and a pullback totally makes sense, to be honest with you, is you look at Meta, right? And again, you got some stocks that have and are about to reach what, all-time highs. Now look at this thing. It hasn't touched its 200-day moving average, right? And I mean, I guess a year, right? So, and so that's something that's going to happen. If you look back, always look back at what a stock respects. And you can see, I mean, it's had stretches like that, but for the most part, it touches its 200 moving average anywhere from like every 4 to 6 months, right? So being almost a year, that's a long time to go, man, without touching your 200-day moving average. And it's actually had a healthy run up, but without doing that, and you'll see it go below, obviously, during the crashes and everything. But for the most part, it'll come down, it'll bounce off that 200 moving average every 4 to 6 months. And so, again, that is needed, that is warranted, and it also lets you know, by the way, if it does come down to 200, that's most likely a buying opportunity for sure if we're not in some kind of market crash. Okay, so if it gets a bounce off that 200, that's a good thing, but it's well overdue. So will it happen after we finally hit all-time highs? And then normally you'll get a rollover from these stocks, as we've seen with most of them that have hit the all-time highs. That's just normal. And so that would be a nice pullback, anywhere from 16 to 17%, really, depending on where it hits it at. Microsoft, again, it's setting an all-time high again. And, here we are. Once March hits, that'll be a full year, right? Now, this is a stock, look at this. It rarely hits its 200 moving average. The only time it normally hits is during a crash, okay? What does it normally do, though? The 50 and the 100, right? Even back here, during this run, you can see it go almost, what is that, 2 to 3 years, right? And that's not a parabolic run or anything, but what it keep bouncing off of, the 50 and the 100. If you just kept buying at the 50 and the 100, that's a great, DCA deal. But this is where knowing the stocks and understanding which moving averages they actually respect and stuff. So this is one of those ones that tells you, again, if this hits the 200 moving average, again, you can see it in 18 during the crash, 2020 during the crash, 2022, it obviously went under during the crash. But if this ever came down to 200 and you want to get in Microsoft, that is your opportunity. But it respects the 50 and the 100. And while I'm thinking about real quick, guys, if you could just hit that thumbs up, help people find the video, really appreciate it, guys. And then you look at CrowdStrike, right? This has been on fire, and you can see, I mean, huge RSI divergence on the daily here. And again, this one's going parabolic. Just look how far above the 200 moving average this thing is. I mean, this just nuts, right? It didn't even touch its 50 or 100 since what, November? So 3 months as it even came down to that one. And again, it's one of the things I'll say, you scroll back and you look again. I mean, oh, wow, that's just straight up. I mean, look how overbought this thing is. It can stay overbought for a while. But again, eventually that's going to play out. It doesn't always have to, but if you look at this chart, you'll see it play out quite a bit, especially when you know these parabolic moves like this. But this is another one. You go back from 2020 to 2022, didn't touch 200 at all, but what it touched, the 50 and the 100, it came below 100 a couple times. And so if it comes down to that 100, right, there's your bearish divergence when it comes back down and comes down to the 50 and 100 again. But, when you see this right here, this is one of those ones that's well overdue for a trip down to its 50 and its 100 moving average, right? And again, this is why I don't believe in chasing stocks like this. Once they go, you just let them go. But you can see multiple times where you'll see this bearish divergence playing on the RSI when it gets too overstretched and everything. But this is another one. Doesn't really, come down to 200 very often. But if it does, normally it just seems to be during a crash. Obviously, it could make a great buying opportunity unless, of course, we are sitting in a crash, okay? So just keep that in mind. But, just going back over here, what are we above the 200? Let's measure this out. We are 68% above the 200. Now, it can get farther. If we go back and we look over here, I think, if I'm not mistaken, this is like, what, 83%? So it can definitely get even farther stretched, but the more it does, the more it's going to have a major rubber band effect to come down, all right? And that was a bull run up right there. But every stock comes back down. Showed you some of the other thing was Friday's video or something. And so just kind of keep that one in mind. Now, looking over here at Shopify, here's another one. Look at this thing. Hadn't touched, let me see, the 50... Last time was November. So now we're going on 3 months. So another one getting overstretched, setting in a daily fair value gap, which you would think we're going to end up getting a rejection off there. You have bearish divergence on the RSI right now. And so this is another one. It's just been on a hot run. These are those stocks I showed you Friday, I think it was. I'm talking about new 52-week highs, and big money's just pushing it and getting it stretched out. And you can see this one, though, does respect its 200. This one will come back down to that 200 moving average when it comes down. And it's very volatile. So when it comes down, it's going to come down hard. That's usually what happens with this one. You can see multiple times where it got to 70 and it would come back down to 50. All right, that's a big drop when you do a percentage. And you see that. But understand also when it comes to bearish RSI divergence, it can go on for a long time. You really got to look on more of the smaller time frames, really, maybe a 4-hour daily, something like that, to really look at it, because you're going to have, like that right there is bearish divergence, and you get a pullback, and that pullback may not look like much, but that's like a 20% pullback, sometimes 30, okay? And so this is what you're looking for. If you're looking for entries, things of this nature, but especially those moving averages, pull them up. You can see look how many times it bounced right off that 200 moving average. So this one absolutely respects 200 moving average. And you rarely, when you really look at it, see it bounce off the 100 at all. You just cuts right through the 100, right? And so this is something you want to look at if you're planning on getting into stocks, things of that nature. And again, I wouldn't be bullish right now. I'm saying on pullbacks, right? Now, ARK-K, again, high beta stuff. I really talk about this one. This is another one. Send this head and shoulders. Bearish divergence starting to play down now. As you can see, it's right there at the neckline. So this is going to either continue to break down, but it is another one that got far overstretched above those moving averages. Now it's starting to pull back, okay? And when we look at this one, you can see this is another one. When it gets moving, because it's such high beta stock, right, which means extremely volatile. Now, Tesla, this one's at major key level here on many aspects. We'll look at this in multiple ways. But you can see that trend line has to hold. You can see the RSI is below 50 on the weekly. You got a bearish MACD cross down there. You do not want to go across that zero line. That would be devastating for this stock. And you can also see there's that weekly 200 moving average, right, which it has broke multiple times on the way up. So it can break. It's sitting right on top of it, inside what's left of that daily fair value gap right there, which I guess you need to get rid of, really. And then this is the anchored VWAP from that low, that 103 low that held, and it's sitting right on top of that as well. You have a lot of confluence right here to see if we get this bounce. Actually, I can keep the daily fair value gap. There's a little bit of it left right there, so we'll keep that in place. But, this is prime. If it's going to bounce, this is where it's going to bounce at. Obviously, it's got tons of bad news on it. I'm still waiting for a downgrade. This is usually when the vultures come in. And so, something else people are looking at, though, when you look at this right here, they always look to see if it's oversold and where the RSI is at on every single bounce coming up. And you can see right there, it's approaching oversold, right? Usually you get some kind of bounce, and the MACD is right at that zero line. So if the MACD goes below the zero line, this thing keeps going oversold. Obviously, we're breaking the trend line, we're breaking the weekly 200, we're breaking the anchor VWAP, all kinds of stuff. Then we got to start looking at different levels. But this is just one of those things. So you look at that and you think, wow, this thing's got even farther to fall, because look how far down the MACDs were on these before you got this bounce, and that was on the way up, right? And so this is just something you got to keep an eye on when it comes to Tesla. Again, watch those call flows or put flows, because they had a lot of put flows coming in this past week, not the call flows. Now, one reason is a big deal, because it's going to drag down, as it's been doing all week, the entire EV sector, okay? All of these, especially Rivian, will go red if Tesla continues to go red. So it'll drag down the whole sector with it. Now, when it comes to earnings, it's all about the banks pretty much, right? You got some big ones reporting, but you also have a lot of regional banks. That's what I'm saying. IWM is going to be key this week, whatever, to see how they're reporting and stuff, to hear about this bank lending program is actually going to end, things of that nature. Really, the only other one really is Taiwan Semiconductors on Thursday right there to pay attention to. But everything else seems really just financials galore. And so we'll see how the banking sector is coming up. I'll listen to travelers over there on Fridays, because I want to see, are we still traveling? Are we still going out there and spending like drunken sailors to get on cruise ships and planes and everything else? So that one will be a good one to listen to. And then economic data, we got quite a bit this week. I mean, Monday obviously is the day, nothing. Tuesday, a little bit right there you can see. Wednesday, a lot of mortgage import stuff, but we do have like retail sales coming out. So people will listen to that Wednesday. That's going to be after the bell. That'll be before the bell opens right there. And then, of course, you'll have more industrial manufacturing data, which has been hot garbage. We'll see if this is actually improving. You really need this to improve to avoid a recession for sure. You'll have a 20-year bond auction. We'll see how that's going, because the 20-year yield is sitting at a key level right now. So that's why I'm really going to watch that and see if it gets a bounce. Then, of course, you'll have more housing permit data and stuff like that. All your jobless claims, initial and continuous. Then you'll have more Philadelphia manufacturing stuff coming out. People tend to listen to that one, especially on the new orders. You really want to pay attention to the new orders and see if they're in contraction or not. And then on Friday, you'll end up with existing home sales and Michigan consumer sentiment. And there will be Fed presidents out there speaking this week, so we'll get to see, what's are they going to be talking about? Yeah, we'll be cutting in March. Maybe we can cut in March. A lot of them have been pushing back on that and stuff. And again, I've showed you where the Fed tracker is. It keeps going up. Like when 74% is the last one I saw on Friday right there. And so we'll see how that goes. Anyway, let me know what you think the week's going to go or how it's going to go and stuff and what you're doing. Please hit that like and subscribe button. I really appreciate it, guys. And I will see you tomorrow.